Trailing stops quite possibly might be my absolute favorite thing to use when actively trading. So in this video, I'm going to talk all about trailing stops. We're going to talk about the pros and cons of using them and really why they are my absolute favorite way of taking any sort of trade in the markets because they allow you to create some very, very large winners if you let a trade really run. So stay tuned. We're going to get into this concept. We're going to talk all about trailing stops right now. Okay guys, so welcome back to the channel. If you are new here, my name is Nick and I talk all about trading and investing. And a lot of what I do is based on shorter term stuff. I'm not a super short term scalper or day trader, though I guess some of these concepts could be employed by people who are interested in that. You could go experiment with them and see if that's something of interest to you. But I'm mostly a swing trader and trailing stops are a great way to let winners become very, very big. Because what we're gonna do, let's start out by talking about the pros of using a trailing stop. Now there are some cons, of course, so if you're really planning on learning about these, stay tuned for the full video. You'll see the cons as well, and we'll talk about some examples. So trailing stops. The big pros that I see when it comes to using a trailing stops is they let winners get big, okay? Because when you are using a trailing stop, what you're saying is, I'm gonna let this trade run as much as it wants to. Let's say, for example, that price comes down to a level you like and you decide to buy that market. You say, okay, I wanna buy this chart or buy this market. And price starts to rise in your favor. Well, let's say your initial stop loss was, let's say here, right? As price goes in your favor, a lot of times people will just take a trade and they will put a stop loss and a take profit. Right? So they'll say, okay, we're going to put a target there. We have my stop loss here, and this is where I bought the market. And if price comes up to there, we're going to smack that trade out and for a nice profit, and we're going to walk away. And that's fine. A lot of people do that. And there's nothing wrong with that. There's plenty of people who have success with that. But the reason I love the idea of using a trailing stop and removing the take profit entirely allows us, for when those scenarios happen where they shoot way past our take profit, we don't want to miss out on all of this extra move. Now you might say, well, Nick, it's okay. At least I got some of the move. At least I took a profit. And you would be correct. And again, that's a con of trailing stops as well, as sometimes it doesn't do this, right? Sometimes price comes up and it hits this area. And if we didn't take profit here, the market reverses and hits our stop loss. And that's very frustrating for traders as well. So I understand that, but bear with me. I'm going to talk about some more interesting concepts with trailing stops. So when the trade does keep going in your favor and you're using a trailing stop, if we have no take profit on this, the cool thing here is that we actually allow ourselves to let this trade grow into a very, very big winner. And if you've heard of this concept here, winners get big. Another way of saying that is it lets winners run. Have you ever heard this phrase? Letting winners run and getting rid of losers quickly? Well, that is a very basic fundamental principle of a lot of trend traders or traders who use trailing stops, because trailing stops, by their definition, allow winning trades to keep running. They don't cut off a trade when it goes in your favor, right? So if price comes up to this level, we don't take profit. We actually just let it keep going. We say, okay, well, we're not going to stop this trade out because it's doing well. We're going to let it keep running. And occasionally, it does let our winners get very, very big. And that is really the biggest pro of trailing stops, is occasionally, not every time. You're sometimes going to have trades where you take into a position and then it comes up and then it reverses and stops you out. And those are no fun. But occasionally it lets a random or occasional winner become very, very large. And what we can do is, with trailing stops, we can just move price up behind or move our stop up behind the price and lock in gains. So for example, let's say we took this trade here and then eventually we move up stops to break even, right? And then we move this distance into profit. That would be 1R, right? And then we move this distance, and there's all different ways that you can trail stops, and we can talk about some different ways to do that. And this allows the trade to become a very, very big winner. In fact, it may sound crazy, but in some scenarios, I've had trailing stops that run for 7R, 8R, maybe even 9R, which means let's say I initially risked $100, for example. And then price moved in my favor so significantly that I closed out the position finally after the stop got hit, right? The trailing stop got hit for a total of plus $900, right? 9 times my initial risk. That's a great return relative to the risk that we initially took, right? And that is usually only possible through trailing stops. I mean, I guess some people will put a take profit that's like 9R, but it's very, very rare for that to be the case. Now, the other thing that I want to say is we want to talk about some of the cons, because there are cons of any sort of trading style. The cons are that sometimes we get the market reverse on us. Reversals are no good, right? No bueno, right? Because sometimes what happens, and this is just the reality of trading, is let's say you do get into this market and you say, okay, I want to buy. So you get into your buy position again. We put a stop down here, and we don't put that take profit on there, right? We're using trailing stops. So price kind of moves up and it looks good, but not enough for us to move to break even. And then let's say it just reverses on us and ends up hitting the stop loss. Many of us have been in this situation. I'm sure actually probably all of us have been in this situation where price starts to go in our favor and we're tempted to take profit, but the market reverses. And this is the argument against trailing stops, is that, you know, when you use a trailing stop, a lot of times the trade goes in your favor and you don't capitalize on that profit, and then it becomes a loss. And I think that personally, for me, this is just something I've accepted. I've accepted that this is going to happen sometimes. And I think it's definitely something that all traders struggle with psychologically. But to me, it's something that you kind of just have to accept, especially if you intend on using trailing stops in your trading, because you have to accept that, okay, sometimes this is going to happen. You get into a trade, it looks really good, looks promising, and then it teases you and goes and hits stop loss. That happens, and that's no fun, but it is just, I guess, the reality of trading. Now, some will argue that if you just use a partial take profit or something like that, if you get out of a trade, then you could have gotten out here, right? Taken some profit here, gotten out of the trade, and then you would have ended up just taking a break-even trade or something like that, right? There's all different ways to exit positions, and that's pretty much what we're talking about today. Is we're talking about probably the most slow and conservative way to exit a position is using a trailing stop, because a lot of times, most of the time, in fact, what happens is it creates more losses. Okay, let me give you an example. If we took this buy trade, a lot of times what happens is because we don't take immediate profit, price might move in our favor for a little bit. And if we had taken a take profit, we would have just closed out the trade for a profit here, right? But then it ends up closing out for a break even or a loss, right? And this happens more often because this is just inevitably going to happen when you're going for a little bit more, when you're allowing your trade to run a bit more. Sometimes you're just going to have a lot more trades that reverse on you, and they cause more losses in your account, which is not fun. So don't get me wrong, this is probably the biggest con of using trailing stops, is it increases your loss rate. However, remember that it allows our occasional winners to become very, very large. So you have to think about that as well. You're swapping out, you're reducing your win percentage for higher potential gains. Okay, so let's now talk about something else. So now we've talked about some pros and cons. We've talked about some of the really good aspects of trailing stops, and of course some of the more annoying things that a lot of traders struggle with trailing stops. Now let's talk about some scenarios. Let's say that in your trading, you're going for, if you're familiar with how I trade with trailing stops, I lock in price at when price moves 1R. I'll show you guys as an example. So let's say that I bought this market here, buy here, stop loss here. And then at this point, when price has moved this distance in my favor, that is where I move my stop to break even, okay? So if it moves further from there, then of course I bring my stop loss up and I trail it behind price. I use mostly a distance filter for my trailing stops in combination with price action. That's another topic for another day, but perhaps we'll get some into there in this video, but I don't want to make it too long. So anyways, let me just say this. Let's say that what ends up happening is you have a lot of losers. You have some break-even trades, you have some winners, and you have the occasional big winner. That is what ends up happening in the layout of most of my trading. So what happens is we get lots of small losses, not big ones, just small losses, because we're risking small, but we happen to lose a lot. Because when you're just putting a stop on a trade and you're just saying, okay, if it runs, it runs. If it stops out, it stops out. A lot of times it's just going to stop out. A lot of times it's not going to go anywhere. And you're going to have markets reverse on you, like we showed in some examples. You're going to have lots of break-even trades. Okay? So you're going to have lots of trades that started working out, right? You get into the market here. Price moves in your favor, you move your stop up, and then it trails you out for break even, right? That is also going to happen very often with using trailing stops. So you get lots of small losses, lots of break even trades, some small winners, and finally some big winners. And the last one is few huge winners, okay? And forgive my handwriting. I'm writing with a mouse right now, so I'm doing the best I can. Some huge winners, okay? And this is typically the layout of your trades. In fact, you could probably use a very basic mathematical chart for this. Not that I'm very good at math, so this should be recognizable for most of you guys. What ends up happening is we can actually visualize this with like a simple bell curve kind of scenario, okay? Okay, so check this out. This is going to be like the distribution, a basic distribution of like what our trades might end up looking like, okay? So what ends up happening is we get... we actually end up, okay, let me think about this in my head. Okay, I get it. So what ends up happening is, let's say that this is a net zero gain or loss, okay? And this is negative loss, and this is positive gain, okay? What ends up happening is that, and this being the bigger we go left, this gets more negative, right? And the bigger we go right, this gets more positive. And this is the result of a trade, for example. So if you took a small win, it might go in this area. If you took a small loss, it might go in this area, right? If you took a break-even trade, it would go in here. And this is generally what the distribution looks like. So this is like the number of occurrences, okay? I know we're getting a little bit more advanced, so stay tuned with me. This is for the real people. If you're still watching this video, by the way, you're a real MVP. I'm proud of you for making it this far. This is where most people are bored of this stuff by now, and this is where, if you really want to be a trader, this is the sort of boring stuff you got to put up with, okay? So some small winners, right? Or lots of small winners, lots of small losers. And as a true, using a stop loss allows us to remove this portion of the board, okay? This just gets cut out. Why? Because these are the occasional, very infrequent, massive losses. This over here is what happens if you don't use a stop loss. What can happen is, and not to say that all non-stop loss using trading strategies are bad, because there are ways other ways to stop out of a loser than just a strict hard stop. Maybe that's another topic for another video, but the idea is that every once in a while, if you have no stop loss on your trade and no exit criteria, occasionally you'll get into a situation, not very often, but occasionally you'll get into a trade that is just a massive loser and ends up, you know, even demolishing accounts sometimes. Okay, so that's off the board when we put a tight stop, or not necessarily a tight stop, but a small risked trade. We get rid of these occasional really big losses. Okay, we're going to talk about the other side of the board, the occasional very big wins. These are on the board. These are very possible for us to happen. So stay tuned for that. We're going to talk about the main portion, though, is this middle portion. Okay, we're going to talk about this middle portion first. Let's review what we talked about. Lots of small losses, okay? Small losses, small negatives right here. This is what we're going to get. We're going to get lots of those small losses. These are not destroying our account. They might take us down. They might cause us drawdowns, but it's not massive catastrophic losses if we're risking something like 1% or whatever. Lots of break-even trades, right? You can see the frequency, the number of scenarios. Lots of break-even trades here in the middle. Then we get some small wins right here, right? We got the small wins category, and you can see it's decreasing in terms of how often it happens that we have a very large trade. Because now you can see, we can even break this up further. Let's use another color. I don't think I've ever used a different color when I'm using this drawing, so let's check it out. Ooh, look at that. Oh, that's kind of an ugly purple. Oh well, it's gonna have to work. This is our big wins category. And you can see that here, there's still some of them that happen, but they're less frequent because of this less occurrences, right? Less of them happen, but when they happen, they're bigger wins, right? We're going more on the right side of the board here. And then finally, we have my absolute favorite, of course, everybody loves these. These are the ones that everybody brags about that happen very infrequently. These are your people using that trailing stop to its fullest extent and allowing the extreme right side of this to happen. And I'm not talking about politics, I'm talking about extreme right side of this distribution curve. The right side here is talking about very infrequent, huge gains, huge winners, because we let a trade run and we hold on to it and continue to trail stops and eventually take a ginormous profit. Not gonna happen very often. You can notice from this black line here, right? The number of occurrences is very low. However, they're huge potential gains. And the reason I love this, the reason I love trailing stops, is because it basically allows us to use this portion of this distribution and remove the large losses. It allows us to capitalize on small losses, small wins, big wins, and huge wins, okay? This is why I love trailing stops. This is why I'm a big fan of using them in my trading. And this is why the reality is it's not necessarily mentally pleasing to using trailing stops because you're taking small losses all the time. A lot of your trades become break-even trades, which is no fun. But the reality is that if you can bear the psychological challenges of it, the upside to using trailing stops can be really big because of this category right here. This category and this category, that's where all the money's at. That's where all the gains come from. In fact, most of your gains are actually going to come from this category, which is low percentage of the time, but very large gains. Okay. So that is the power of trailing stop, guys. I hope you liked this video. If you did, please give it a thumbs up down below. Please subscribe to my channel and support me on it just by watching the videos. You don't really have to pay anything or anything like that. If you would like to join our community, there's a community link in the description that you can check out if you would like to support the channel. That community is filled with traders that are down to earth and realistic. If that sounds like something that would help you out, then by all means, come join us. Thanks so much for watching the video, guys, and we'll see you back in the next one.